In this video we will look on several factors on why the price has dropped and my views on it, coming right up. We will dive into this topic from general to specific factors. The first general factor for why the PlanetWatch token is down is the overall sentiment in the market. With rising interest in USA and the highly tensioned situation between Russia and Ukraine, all the markets are down, regardless if they are stock or crypto. And this is a normal response to a high uncertain period. People sell their assets to take refuge in cash. Now, related to PlanetWatch, we must see what constitutes the price of the token, and that is the balance between supply and demand. When the supply is higher than the demand, we have a price decrease, and vice versa, when the demand is higher than the supply, we have price increase. Going forward, we will look at specific details on why the price is down and show you that while short term they are affecting the token price, long term they will provide value and consolidation for the project. Each should do their own work, as this is only my analysis on the situation. So let's take a look at the supply. Besides the daily budget, we have more than 1 million planets as rewards each day from the recycle bins. You can find out more about how recycle bins and rewards work, links to my videos on that in the top right corner and in description below. This 1 additional million planets was not the case even 2 months ago. We have way more planets on the market each day that makes the supply higher. That's why rewards dropping is not such a bad thing, as it will constrain the supply. Another factor is staking. A lot of crypto projects use this instrument in order to determine the members of the community to hold to the token, and they receive interest on those deposits. Meanwhile, the project makes sure that the supply of the tokens on sale is constrained. In the current state, PlanetWatch will not have traditional staking. Why? Because PlanetWatch is not a financial institution. What we know is that they will put in place soon the Staking for Planet initiative and the climate trade. This will allow for PlanetWatch to plant and care for trees in exchange of staking the tokens, or in case of climate trade, to swap planets for carbon credits. And while some people say that this is cute but inefficient, we have to look beyond individuals. Both of these initiatives are targeted for corporate clients and company partners. Like I said in a previous video, companies will have multiple strong reasons to join PlanetWatch because of these initiatives. 1. They will be able to get the highly valued research certification for their buildings. 2. While many companies are afraid of cryptocurrencies with all the regulation issues, but with these two initiatives, they can easily stake the tokens and then go public and say that they are also planting trees. Or they can, through the climate trade partnership, swap the planets with carbon credit and offset the carbon footprint. This kind of corporate social responsibility projects are highly regarded by corporates and will help with constraining the supply of planets. Sooner or later, the corporate partners and clients will become the big players of this project, so that is why we see focus on them. Another big factor on the supply is the negative sentiment. People who see the price of the token drop due to the market conditions will sell them because of fear. This will push the price even lower and a downward spiral is created. More than that, I will show you that events that a lot of people perceive as negative and determine them to sell their tokens are meant to consolidate the project and are good in the long term. The first one is the Type 4 situation. It started with the issues on rewards as the Aware didn't scale the servers properly, and so PlanetWatch couldn't get the necessary streams in order to give the maximum reward. While I think PlanetWatch has its fault in not negotiating a stricter service contract, in the end, Aware is at fault for the situation. So the official explanation is that they don't want new sensors on the network while there are issues with them. My guess is that by freezing new Type 4 devices, it puts a serious pressure on Aware to fix their servers as their sales dropped. Another element that influences the token sale is the banning of cheaters. A lot of people and their sensors have been recently banned, and I assume that these people are selling all of their planets because of this. So of course, long term is the way to go. Sensor farms will pollute the data and make the data products of lesser quality. Of course, we also have the new 5 license limit per person. If you don't know what I'm talking about, link to the video on explanations on the new rules will be in the top right corner and description below. While I think this is also a huge part in the drop of the price of the token, I see why they made this restriction going forward. First, it will eliminate a lot of scalpers. Right now, the only way to get a ton of sensors in your hands is either through a deal with the manufacturer or by being a company and PlanetWatch approving you. The second reason is that by limiting the number of sensors per person, it will ensure a greater distribution of sensors. If someone orders 30 Arduinos, it's more likely it will deploy all of them in a certain area. And while this is great, it means that the next person in the waiting line will have to wait much longer just to get one sensor. And this is the main reason, in my opinion, and here I'm slightly guessing, is the business partnerships. While us, the community, can deploy all the Arduinos and the other sensors needed to have coverage in a major city, PlanetWatch can't ask us to help them with data cells. Meanwhile, if a company asks, for example, for 200 Arduinos to cover a major city, PlanetWatch might condition that deal on endorsement from institutions that can buy the data. In other words, with companies, PlanetWatch can sell the sensors only to the ones that will help them with data cells. And that is something that us as individuals can't do. So yes, while these restrictions affect us all in the community, it will help consolidate the project. The last element that dragged the price down, in my opinion, is the latest AMAs. Quite a few people got the feeling that Claudio said that the community and the token are not important for them. Here is my take. Like I said in this video, Claudio is not allowed to talk about token price, ROI and the financial aspects of this project. As PlanetWatch is not legally set up as a financial institution, if he will do that, he might drag the project into legal problems. And of course, none of us wants that. I will put again a part of the recent AMA and be careful what he is telling us. Just change the word value with the token price.
And okay, once again, this is a good time to remind you what PlanetWatch is about. It's not a get-rich-quick scheme. So if your main concern is how many tokens you're earning, I mean, I can understand it, but let me tell you that you need to have a medium to long-term perspective with regard to your engagement with PlanetWatch. And if you can keep this perspective, I think you will be happy. I mean, I think we'll deliver what you expect, and we'll be building a great project and a great company. So my recommendation, once again, is not to get too focused on short-term events, and in particular on short-term financial return. As you know, we are not a project, we're not a mining project, we're not a financial project, so I shouldn't even say that, but let me say it. I mean, if you are looking into short-term financial gain, think again, because that's not our goal. We are into delivering medium and long-term value, and value is a comprehensive notion, right?
So my overall sentiment is that he cares about the community and the project. If he didn't, he wouldn't say such things, and more important, because actions speak louder than words, he wouldn't care enough to make these weekly AMAs for the community. So if previous elements were related to the increased supply, let's look at the decreased demand. Every sensor and every license sold by PlanetWatch is done through planets, and that is what generates the current demand. While the Type 4 licenses are held and that might hit the demand, historically the sensor batches sales are what drove the demand higher. While a Type 4 license is around 40 euros, an Arduino is over 2000, tax included. In my opinion, is that the delay in sensor sales is the short-term problem. Another factor is that people assume that PlanetWatch is not validated on the market, but that's not actually true. They already have corporate clients, and through one of them, the Hilton DoubleTree Hotel, they released a scientific paper and helped them get the research certification, one of the first in the world. Links will be in the description below to those articles. And related to the outdoor data cells, we know that PlanetWatch has or will have full coverage on 20 major cities this year. So I am confident that in 2022 we will see the first outdoor data sales. In conclusion, I don't see the fundamentals of the company getting weaker, quite contrary. It's terrifying to see such price fluctuations, but I still believe that the project is strong and it's still getting better. That's why I will hold to my tokens. Diamond hands. That's it for this video. Give it a thumbs up. Subscribe if you haven't already and stay tuned. Until next time, see ya!